Hey traders, Raghee here, and we are going into our weekly API to EIA crude oil inventories window. Now, the API, or the American Petroleum Institute inventory number, is a private number, and that number comes out at 4:30 on Tuesday. The EIA, the Energy Information Administration, that's the public number, that's the government number, and that's the one that comes out on 10:30 on Wednesdays. Now, in between those two windows is some interesting discounting that goes on. What is discounting? Discounting is basically the market determining how they want to position into different high impact volatility events. So, of course, any inventory number for a commodity is going to be a big time event. Well, we continue to look for long opportunities in crude. We've engaged the market down in the 30s. We've engaged the market in the 40s. We want to do it again here. The last time we bought was $40.05, which was an aggressive or aggro level from which we got long. Well, we want to take a look at a few volume levels as what could be ultimately catalysts for support, and then that would be a reason for us to get long. And then the event catalyst is going to be this window between API and EIA, where we might get a bigger amount of volatility for the week. This happens every Tuesday, Wednesday. And the levels that I'm watching really closely are really much closer to 40.80, maybe even $41, $41 to 40.80. There's some interesting volume levels as support waiting down there. So the next thing I want to do is determine what's the likelihood that we get down there and what are the different levels. So I would treat the 40.80 pullback level. Let's kind of zoom in on that a bit. I would treat that 40.80 to 41 level as pretty aggressive. In fact, I'm really much more interested in something a little bit lower, closer to say 40.20. Now you might say, well, Rog, why are we looking for weakness to buy into? What about the possibility for a launch higher and momentum pulling us into the trade? Well, I'm showing you the grab candle setup, meaning I've got a double green market, 8 over 13, 13 over 21, 21 over 34 period exponential moving average. I'm looking for a pullback or a retracement to support to essentially buy the dip. But when do we look to buy rips? When do we look for momentum to trigger a long position? Well, take a look at the chart here on the right. This is my momentum layout. And right now, the tool that I use to determine whether or not we have momentum, this is the 10x candle, right now is pretty much showing me neutral. Not that it's impossible for a breakout, but it's not a high probability play to look for to move to the upside like that. So because I have yellow 10x, I'm going to go ahead and say, you know what, I'll pass on the momentum for now, and I'll look for some sort of pullback buy in order to get long. Now, tomorrow, we'll start looking at expected price movement ranges. And let me give you a couple levels to look at for tomorrow in terms of that. So what we're going to do is we're going to head on over to the auto chartist, and I'm going to pull up crude oil here. And let's see, crude front month. All right. And what I'm going to look for at 10:30, the kind of move that I would like to take advantage of, is going to be a minimum of about 80 cents to $1.10. I'd like to see this 10 o'clock candle. Remember, the event comes out at, or the data comes out at 10:30. I'd like to see this 10 o'clock candle give me a move, a sudden move, a correction to the downside of 80 cents to $1.10. And that could be a really good exhaustion move, a volatility exhaustion move to look for a buy. So let's keep an eye on that move between the hours of 10 and 11 o'clock, where the bulk of that is going to happen basically between 10:30 and about 10:40. All right. Let's look for that then. Look for an opportunity to get long and follow this double green uptrend. I'll see you in the next update.